But while crypto is meant to be detached from the global economy and banking system, the effects of the banking crisis could actually be bleeding into this space. Crypto exchange Binance reportedly is struggling to find a bank to hold its customers' cash after the failure of its primary partner, Signature. Institutions may be looking to avoid risk more than ever after SVB's collapse, and the crypto space has had its share of black eyes lately, namely FTX, which released a report from its debtors highlighting what led to its failure, which was summed up by new CEO John Ray as hubris, incompetence, and greed. Here to discuss is CNBC.com tech reporter Mackenzie Sigalos. Welcome back. Okay, so Binance needs a bank pretty quickly, it seems.
Yeah, it definitely does. So it's one of those crypto firms that has been struggling to find a banking partner since the collapse of Silicon Valley Bank and Signature and Silvergate, which were very friendly to the industry. But what's interesting is if you look at some of the bigger players, you've got Circle and Coinbase who haven't had a similar struggle. They're still working with leading banks in the country, but Binance has those regulatory concerns.
So why don't they just go to some of the big banks and say, I'd like to put my money? I'm sure a lot of those banks would be delighted to have customer deposits.
But with Binance specifically, it's still facing that lawsuit from the CFTC saying that, they've helped to facilitate nefarious trades. They're perhaps bypassing U.S. regulations. So there's concern about potentially associating with them. And that's just the CFTC. There are concerns that the SEC might have, certain things to say, perhaps the DOJ. There's been reporting along those lines from Reuters. So that's the concern here. And what's actually funny is that
you'd be playing in a messy swimming pool.
Right. And you don't want to get involved. And if anything, you would have thought that it would have been crypto markets failing after, falling rather, after the collapse of these two big banks. But if anything, it's been the exact opposite. You've got Bitcoin and Ether outperforming bank stocks by a mile since March 10th. It's 1 month since the collapse of SVB, and the market's done quite well.
Yeah, and the bulls are loving it. Meanwhile, over at FTX, as they kind of chronicle the downfall there, a lot of people are chuckling over the $40 million that Sam Bankman-Fried said, we can't even find this money half the time. I mean, so that's where you get John Ray's summation. I think he said incompetence, hubris, and greed.
No, exactly. And to go to your earlier question, Tyler, and this dovetails with what Kelly is saying, it's these practices where there isn't a lot of confidence in corporate structures and any sort of typical compliance that you would expect at a more established entity. Meanwhile, we're talking about billions upon billions of dollars worth of crypto that's been lost. And Sam Bankman-Fried allegedly in this report wrote it off as so goes life, so is life, such is life.
Right. What's 40 million here, 40 million there, 10 billion if that's the number. Mackenzie, thanks. We appreciate it. Mackenzie Sigalos.
Nice to have you with us.